Hello, good morning. How can you hear me? Okay, I will ask those who present to put pluses if you can hear me well. Okay, thank you. I wanted to ask sorry for the delay. Due to technical issues, we had to start this webinar a bit later. So, okay, let's go back to what we were going to discuss today. Several webinars before I started to talk about the patterns of the market in the candlestick analysis. These patterns helps us to determine changes in the market, changes of the patterns, changes of the direction of the market. So they help us to understand the trend. They help us to open the trades. They help us to understand when it's better to open the trade, when it's better to close the trade, when it's better not to trade at all. So we spoke with you about the morning star, about the abandoned baby, as far as I recall, hammer as well. So today I wanted to talk about the such candlestick pattern as 3 black crows, 3 white soldiers, and 3 line strikes. So they are similar, but they show us the different situation on the market. They describe us. So let's start with the 3 black crows. What is that? I prepared the picture for you so to show how it looks like. So you see 3 black crows pattern. That's a bearish reversal pattern that consists of 3 bearish candlesticks that are like in the dark color on this picture. On the chart, they would be the red one. Okay, so as you see, they usually appear on the top of the trend, and that's the trend reversal pattern. So they should only be taken into consideration when they appear on the top of the trend, when they appear on the top of the uptrend, I mean. So they indicate the weakness of the uptrend and potential emergence to the downtrend. They should have common features. Each candle in this pattern should consist of relatively long body, bearish body, and each candle should close near the end or within the body of the previous candle. Okay, so it should end like in this level, as we see on this picture. It can end before that, earlier, within the body of the previous, but the close should be lower than the close rate of the previous candle. So we see here that all 3 of these candles, they correspond the needs, they correspond the description. So pay attention. Firstly, only when they appear on the uptrend, only when they don't have the long shadow, upper or lower, and when the next candle starts within the limits of the previous one, that's better. This candlestick pattern usually used within 1 day range, but of course they can be seen, they can be noticed within the shorter time frames. Even on the 15 minutes time frame, sometimes they can be noticed, showing us that the trend has changed. Well, usually it takes like in 72% cases, so they work out good, showing us that the trend has changed. Well, this pattern can be used by both those traders who prefer to trade like the long-term positions, both for those who prefer to trade like, let's say, intraday, because they help them to understand the general trend, and they help to understand what can happen next on the market. Okay. Well, also the opposite to three black crows, there is the pattern which is called three white soldiers. You can see it here. So the description is basically the same. Three white soldiers, they appear at the end of the downtrend, and they show us the starting of the bullish trend. They also can appear after the period of consolidation, and in this case they are not considered usually as the strong bullish signal. So if you notice them at the bottom of the downtrend, you see three white soldiers that can show that the trend has changed, and the bulls now dominate on the market. So the description of these candles should basically be the same as to three black crows, but opposite. Each candle should start within the body of the previous one, and it shouldn't have long tails, it shouldn't have long shadows, and the body of the candle should be relatively long. When the candle of the last, the body of the last candle is not that long, when it's like shorter than the previous one, it can be the signal that buyers are losing control of the market, and the general trend cannot change. It can stay the same. If there was a downtrend, it can continue going down. So pay attention to the last candle, because it's a show pretty much. It showed if it's like has the long body, it tells us that the buyers, they're still strong on the market. And if this candle is short, it tells us that the buyers, they are losing control over the market, and the sellers can take the initiative. Okay? So these are the two basically patterns that look alike, but they show us the different changes. The three black crows, they show us that the uptrend has finished, and the price and the market can start going down. It can show us the beginning of the downtrend. So it should be taken into consideration only on the top of the uptrend. The opposite with the three white soldiers, they should be taken into consideration when they appear on the bottom of the downtrend, and they can show us that the situation on the market has changed, and now the bulls are dominate here. So basically pay attention. This is pretty interesting patterns of the market. And also this pattern can be also used by the traders who trade as for long term, as for short term, as these patterns, they show us the change of the trend. And also, when you're looking for these patterns, you should pay attention that it should appear, if we talk about 3 black crows, it should appear on the uptrend. 3 white soldiers should appear in the downtrend. They should be taken into consideration only in this case. Okay? So, how to trade on these patterns, how to use them in your trading approach? Well, basically you can open trades based on that. When you make sure that the trend has changed, you can open the long-term trades and make money on that. Within the third candle, if we are talking about the candles for 1 day time frame, some traders also open the trades within the limits of the last day. When the market breaks through the upper, the price of the upper candle, let's say here, they open the trade for till the end of the day based on this pattern, believing that this pattern will work out. The same in this situation. So the third candle till the end of the day, and hoping that the price will continue to go down. So also what I advise to pay attention to is such thing as 3-line strike. Here it is. Hold on. So 3-line strike, they can also be bullish, they can be bearish. So what do they show us? They show us the end of the uptrend or the end of the downtrend. What is similar with them? So we see that here we have like this pattern, though it's called 3-line strike, it consists of 4 candles. So 3 of them should be the same color, and when the price of each, the next candle, should start with the body of the previous one, as we see here. So the shadows shouldn't be long, and the price of when the candle is closed should be higher than the price of the previous one. And the fourth candle, what is its description? It should start upper than the limits of the previous candle and the limits of the last candle, third candle, and it usually on the market it goes for the price below the price that the first candle show us. So it should close near the open of the first candle. The same is here. Here we see the bearish 3-line strike candlestick pattern. All 3 candles, they correspond to the description. Each new one starts within the limits of the body of the previous one. The shadows, they are relatively short, and the last candle, the fourth candle, starts below the lower limit of the previous candle, of the third candle, and it ends near the open price for the first candle. So one, they should be taken into consideration. They can show us the end of the downtrend in this case, or the end of the uptrend in this case. So we see that, let's say that each candle showed us the day, the changes within the 1 day time frame, and this candle has crossed everything that the price on the market has grew within these 3 days, and it started to fall. And here it started to grow. So we see that within 1 day, the market grew faster that it fell within the 3 days. So what to do in this case? When you see that there are signs of this pattern, of course that's would be good to open the trade for low in this case, for high in this case, based on the time frame that you are using. Of course, well, this pattern came to us from the stock market, and mostly it was used for the relatively long time frame. So 1 day, of course, some traders are using it for the shorter time frame, let's say for the 4 hours, for 1 hour, and that's up to them what time frame to use. So if you think that this is the pattern and you're ready to open the trade, well, you can do that. And also I wanted to pay attention that it's better to use these patterns when they are combined with the other analysis, with the other method of market analysis, both the technical analysis as well as fundamental. So you decide yourself how to trade based on them. But of course it's good to take into consideration these patterns, to know about them in order to be aware if you will see them, that they take place on the market. Okay, so basically that's all the information that I wanted to tell you, and the task for you till the next time, till the next webinar, will be to search for these patterns on the market. And I would like to know that you are able to find them out on the market, to notice them, and to open the trades based on that, in order to understand the importance of these patterns and to understand that how they work. Okay, so this time this webinar was pretty short, and I want to thank for your attention, and see you on Thursday on the trading webinar, where we're gonna open several trades, where we're gonna discuss the trading approach. And I hope that this information that was said to you today was you will use it in order to trade successfully, in order to improve the knowledge that you have about the market. So thank you for your attention. Take care.